Good afternoon. July's market report stats are in for 2022. We're beginning to see a little bit of the shift that's going on, that what we've been hearing about for quite some time. So before we jump in again, my name is Robbie with Robbie Breaux and team at eXp Realty. So July's stats for 2022, we saw a little over a 20% decrease in the total number of homes sold throughout all of Lafayette Parish. 453 homes last year, 359 homes this year, which is a decrease of just under 21%. Year to date, we're down right at 9.8, almost 10%. So before we start freaking out and wondering what's going on with everything, when we start comparing ourselves to the last normal year, July of 2019, we actually have outperformed in total number of closed unit sales, 2019 July versus July, 32.33%. We're over 20% higher than what we did in 2020, which was also a record-breaking month at the time. So dollar volume told a little bit less of a story. We weren't quite as far down as what we were on the total number of units. We closed 120 million last year, 108 million this year in total closed dollar volume. That's the combined number or dollar volume of all the units sold inside Lafayette Parish from all the companies from all over Acadiana. That was a drop of about 10%. So what that tells us is, even though we're selling fewer homes, we're selling them at a more expensive home, and that actually shows up in our average sales price. All over Lafayette Parish, $283,000 this year, $5,000 last year. That's an increase of 11%, which kind of makes sense. We got a difference between the two of right at that price point. So some of the leading indicators that we like to take a look at to see where the market is heading. Last year, new homes listed coming on the market. The signs that are showing up in the front yard, there were 500 homes listed, 365 homes listed this year in Lafayette Parish. That's a drop of 27% or 11.5% so far this year. In the homes that went off the market, that's the demand, that went down as well. 317 versus 438, right at 27%, and it's 17.5% decrease. So before we start thinking, oh my gosh, all these numbers are really terrible, the new homes that were coming on the market, or the things that were showing up for people to be able to purchase, there's fewer homes that are coming out. But finally, we're at a spot where we're seeing to get a little bit more inventory than what we were before. So the spread, if you look at, we were talking about just a second ago, year to date, our new homes on the market's down 11.5%. The pending homes coming off the market is down 17.5%. We got about a 6% spread of more homes showing up on the market at any given time. So that I like to call it our active in range. The available homes during July 2022 was right over 1,081. Last year, this time was 1,171. That's a difference of 7.5%. So we're still running a much tighter inventory from what we were seeing before. If you guys watched our Jesse Reagan and I's podcast last week, the Fed's raising the rate made lots of noise. My phone was ringing off the hook about that, about what that does to go and affect the mortgage rates. That's actually dropped them down. We went from 6.25. Rates are kind of all over the place. They've been anywhere from 5.5 to 6 almost every day. So we're not quite at the tip top of what the interest rates are. Those are starting to teeter back. Hopefully more good news of that is coming. Those, typically speaking, are 15 years about a half point below. Government's been fluctuating in the fives, somewhere in the fives. It's kind of all over the place. So if you got any questions about what your equity position looks like, before we jump into that, the other thing that we're happening to see, the multiple offers are not showing up quite as often unless you're in the lower price point that's out there. There's still very few things to be able to choose from, but we're starting to see more folks making adjustments on their price. And if you're listing the house, we're not necessarily in a spot where we go and stretch the number that you could have a couple of months ago. We're starting to peel back. And while we're seeing, drops in the total number of units, total dollar volume, we're seeing things coming back down to normal, which is a good thing. We need something a little bit more balanced as far as the number of properties that are out there on the market. Sellers don't need to be, in wild control, nor should the buyers be. My grandpa always used to tell me if both parties left a little frustrated, it was probably a good deal. That being said, buyers, if you're out there, we're actually seeing some price adjustments that are showing up on our contracts that are popping up, which is good. You're not competing. You actually have a chance to be able to sleep over the evening to make a decision most of the time. Not all the time, but we're still running into that. Sellers, you're still getting significantly more than what you were doing 2 years ago back in this other normal market. So best advice right now, if you guys are looking to make a move and stay in something for a year, probably not a good idea to push pause. If you're going to be in something 5, 7, 10 years, the market's going to catch up with appreciation at some point. If you're still worried about the rate, I don't think we're going to see 2.5%, 3% interest rates. Is it possible? Yeah, probably not. But that being said, if there's a house that actually makes sense, you may have an opportunity to be able to catch the slightly lower rate than what we had a few weeks ago and still be able to get a price adjustments coming over for the seller. So if the rate's not quite where it needs to be, marry the house, date the rate. Super important to be thinking about that. So as far as your sellers, if you need to sell before, look at it, getting your equity position, finding out what that happens to look like. Please don't hesitate to either shoot me a direct message, give me a call on my personal cell, 337-658-5690. I'd love to hear from you. As always, thanks so much for joining us.